chief executive himself signaled borrowing rates will go higher as the government addresses rising inflation and a weak peso against the dollar. On Twitter, Mr. Marcos said they may have to defend the local currency and that further economic developments are expected. Joining us now for his insights and outlook is ING Bank senior economist Nicholas Mapa. Nick, thank you so much for joining us. You heard it from the president saying the Philippines will continue to use interest rates to fight inflation and may step in to defend the weak peso. Is this a strategy to talk up the currency without using any tools at this point to defend it?
Yeah, good evening, Rico, and thanks for having me on the show. I guess trying to defend the peso and ensure FX stability to some extent can limit inflationary pressures in this, I guess, in the realm of imported inflation by making sure that the currency doesn't weaken further and drive more inflation derived from imported products. However, as mentioned in the sort of program earlier, a lot of the things that are driving price pressures now are supply side oriented or supply side driven. The supply shock that has lasted pretty much the entire year continues to feed through to the rest of the economy. So yes, rate hikes will help, I guess, stabilize the FX, help also try to deliver some or anchor inflation expectations. But at the end of the day, if the supply shocks continue to hit us, we're likely to still see price pressures pervade. One other thing that I wanted to highlight is that if we resort...
Nick, I'd like to jump in, but I'm just talking about today. The rhetoric of the chief executive by saying these words about inflation, interest rates, and the peso. Did he use this rhetoric? Was this rhetoric the cause of the Philippine peso to appreciate against the US dollar, which is now at 58.75 from 59 yesterday?
Well, I think the comments came out after trading hours. There was also a bit of a rally for Asian FX today, a bit of an improvement in overall risk sentiment. So I guess coinciding with the comments from the president, also a rhetoric like this tends to anchor expectations as well. So I guess right now with all the challenges that we're facing, we're going to need everything that we can get, all the help we can get.
And the peso has already lost 13.5% against the US dollar year to date and has depreciated the most against its Southeast Asian neighbors. When do you think is the government likely to intervene to support the peso? And does it have the arsenal? Does it have the gross international reserves to defend it and intervene?
Yeah, well the BSP has, I guess, the mandate to keep price stability. And from time to time, they will step into, as they say, smoothing out FX volatility. And they've been doing that for the past few months. And I think they'll continue to do so, more so in the months to come. They do have quite the stash of gross international reserves. Throughout the pandemic, the BSP was the most active central bank in terms of building up its arsenal. They rolled up their sleeves and brought up GIR to about 110 billion. In terms of having enough, I think if they continue to need to intervene and participate in the spot market, they can last for about 27 months before they run out. So it's still a lot of time. They still have a lot of ammunition to fend off any speculative attacks for now.
So if you say that when the peso has depreciated from 51 to 59, the central bank has intervened, to support the peso against the US dollar from not falling even further, maybe towards the 60 or 65 level. So why is the president saying that the government may step in to defend the weak peso when you're already saying that they've already intervened?
Well, I guess they'll need to continue to be present in the market to ensure that everything is orderly. I think the BSP governor is saying that if you have legitimate transactions, we will service you. What they are trying to guard against is speculative, actions. People trying to speculate against the currency. But by all means, if you're running a business, if you need FX for your firms or requirements, then the BSP, it's a legitimate transaction. They'd be very happy to service that. But one thing again, just trying to guard against the speculation that they're seeing in the market or that they suspect is happening in the market, and I think that's the right call.
Last month's inflation rate was the highest in 4 years, Nick. How much more aggressive should the central bank be in raising rates to reduce inflation?
Yeah, so the BSP has said that they'll do all it takes to sort of anchor inflation expectations. At the same time, they also want to sort of benchmark themselves against the U.S. Fed. I think BSP Governor Medalla is saying that he wants to maintain a 100 basis point differential with the Fed. So I think from now, we'll just have to take our cue. How high does the Fed go? And then from there, try to maintain differentials to ensure FX stability. One thing I wanted to highlight is that as the BSP hikes policy rates, it's also combating inflation, but at the cost of growth momentum. So we hike to try to get a hold on inflation, but we're actually the offshoot of that is that we're going to be slowing growth. So I guess it's a balancing act that the government wants to ensure that yes, we ensure inflation, but at the same time we don't put the cart before the horse, and then we chase inflation for its worth, but growth is slowing down considerably. So I think it's a balancing act that they're going to want to ensure that inflation is under wraps, but at the same time not slow growth to the point where we fall below our targets.
And what is your outlook for the Philippine peso against the US dollar? There have been a lot of opinions over the past few weeks that it could even fall to 65 against the US dollar. What is ING's forecast? Can it get past 60? Or will the central bank continue to defend it when it reaches that level?
Yeah, well, there's so many factors at play here, Rico. You have the international factors where the Fed is going to be taking their interest rates. So I guess it's very difficult to say where or what level we'll be seeing the peso. There are definitely depreciation pressures for now. We are running a sizable trade deficit. Our imports continue to bloat. At the same time, our exports have been struggling. But there are, I guess, some positive developments. Remittances came in the other day at 4.1%. So it's going to depend on the inflows, remittances in the next few months as we run up to the Christmas season. And once again, a lot will still depend on where the Fed will take their interest rates.
So the peso is weak because the dollar is strong. Is that correct? Or like what you said, it's also because of the trade deficit?
Yeah, there are two sides to that story. Half, of course, is because the dollar is generally stronger against almost all currencies in the world right now. But the other side to the story is that we are running a sizable, in fact, historic-wide trade deficit, largely borne by your imports running way past your exports. So we have a trade deficit now that's hit historic proportions. And with that type of dynamic, you're going to see pressure on the currency.
ING Bank Senior Economist Nicholas Mapa, thank you so much for your insights.